Hello everyone, this is Grace here. In this video, we'll be discussing problem 4.14 from the chapter Contract Costing. Problem 4.14. Exco Limited undertook a contract for Rs 15 lakh on an arrangement that 80% of the value of the work done as certified by the architect of the contractee should be paid immediately and the remaining 20% be retained until the contract is completed. In 2014, the amounts expended were materials 1,80,000, wages 1,70,000, carriage 6,000, cartage 1,000, sundry expenses 3,000. The work was certified for 3,75,000 and 80% of this was paid as agreed. In 2015, the amount expended were materials 2,20,000, wages 2,30,000, carriage 23,000, cartage 20,000 and sundry expenses rupees 4,000. 3/4 of the contract was certified as done by 31st December 2015 and 80% of this was received accordingly. The value of unused and work in progress was ascertained at rupees 20,000. In 2016, the amounts expended were materials 1,26,000, wages 1,70,000, cartage 6,000, sundry expenses 3,000, and on 30th June, the old contract was completed. Show how contract account as also the contractee's account would appear for each of these years in the books of contractor, assuming that the balance due to him was received on completion of the contract. So here they have given the information for 3 years 2014, 15 and 16, and the expenses related for all the 3 years is given, and they've asked us to prepare the contract account and contractee's account and would appear for each of these years in the books of contractor, assuming that balance due to him was received on completion of the contract. So we will be preparing contract account for all the 3 years, that is 2014, 15 and 16, and contractee's account. So let us get into the solution. Contract account 2014, particulars amount. So for the year 2014, materials 1,80,000 is taken. Then we have wages 1,70,000, carriage 6,000, cartage 1,000, sundry expenses 3,000. The work was certified for rupees 3,75,000 and 80% of this was paid as agreed. So by work in progress, work certified is given 3,75,000, which has been taken. So we have taken all the expenses and work certified. Work uncertified is not given for this year. So with this work in progress 3,75,000, we will minus 1,80,000, 1,70,000, 6,000, 1,000, 3,000. So the difference what we get in your debit column is 15,000. So 15,000 is your notional profit which is carried forward. So this 15,000 will be brought down by notional profit brought down 15,000. This notional profit should be divided to, which is to be set off to your profit and loss account, and the remaining will be transferred to your reserves account. So for that we need to know the percentage of work completed. To know the percentage of work completed, the formula is work certified divided by contract price. So what is the work certified amount is 3,75,000. The contract amount is 15 lakh. So 3,75,000 divided by 15 lakh will give you 3,75,000 divided by 15 lakh will give you 0.25. So 0.25 is nothing but 25%. So 25% is the percentage of work completed. As the percentage of work completed is 25%, which means one third of the contract would be taken. The formula will be notional profit into 1/3 into cash ratio. In this formula, in this problem they've given us a cash ratio, which is 80% of this was paid as agreed. That means that is the cash receipt percentage. So when cash receipt percentage is given, then no need for you to adopt the formula. So out of the cash ratio formula, that is cash received divided by work certified. Directly you can take into the percentage. So as your notional profit is 15,000 into 1/3 into 80% is the cash ratio, which will give you 4,000. So 4,000 will be transferred to your profit and loss account, and then the remaining will be transferred to your reserves account. So out of 15,000 of your notional profit, 4,000 to profit and loss, the remaining 15,000 minus 4,000, which will give you 11,000, will be transferred to your reserves. So now we'll prepare the contract account to be followed by for the next year. So the next year is 2015. So 2015, the work in progress which is still going on in for the year 2014 will be brought down for the year 2015. So two work in progress work certified 3,75,000. So with this 3,75,000 which we have brought in for the next year, we will minus the reserves which is made in the previous year. So less reserves, that is the reserves of 2014, which is 11,000. So less reserves 11,000. So the difference, the value what we get is 3,64,000. So now with this we will take into all our expenses. So materials 2,20,000, wages 2,30,000, carriage 23,000, cartage 2,000, and sundry expenses 4,000 will be taken here. See, all the expenses and along with the amounts are being considered here. So next we need to check have they have given us the work in progress and work in progress items, that is work certified and uncertified for this year. So here they've stated 3/4 of the contract was certified as done by 31st December 2015 and 80% was received accordingly. The value of unused and work in progress has ascertained at 20,000. So they have told 3/4 of the contract was certified, and they've given us the value of unused work in progress. Work in progress in the sense it is your uncertified amount. So now 3/4 of the contract was certified as done by 31st December 2015. So 3/4 in the sense, what is your contract price? Your contract price is 15,000. So 15,000, 15 lakh. So your contract price is 15 lakh into 3 divided by 4, which will give you 11 lakh 25,000. So we will be taking by work in progress, work certified 15 lakh into 3 divided by 4, which is 3/4 of 15 lakh will give you 11 lakh 25,000. And in the question they have stated work uncertified or unused and work in progress was sustained at rupees 20,000. So 20,000 is your uncertified amount. So now if you look into the difference, your credit side, that is your work in progress items, are more compared to your debit side expenses. So the difference what you get is, after from the total of 11 lakh 45,000, if you minus your materials, if you minus your balance what you've got from brought down work in progress, that is 3,64,000, 2,20,000, 2,30,000 minus 23,000 minus 2,000 minus 4,000, you will get a difference of 3,02,000, which is your notional profit carried down. So this is your notional profit. So this profit will be brought down by notional profit brought down 3,02,000 to ascertain how much will be transferred to profit and loss and how much will be transferred to your reserve account. So 3,02,000. So your top profit and loss, to ascertain how much to be transferred to your profit and loss, you need to calculate or find out the percentage of work completed. To find out the percentage of work completed, the formula is work certified divided by contract price. Your work certified for this year is 11 lakh 25,000. So 11 lakh 25,000 divided by 15 lakh, which will give you 11 lakh 25,000 divided by 15 lakhs will give you is equal to 11 lakh 25,000 divided by 15 lakh, which will give you 0.75, which is nothing but 75% into 100, which will give you 75%. So 75% in the sense the formula will be notional profit into 2/3 into cash ratio. As they have given the percentage of cash received in the question, we will take the percentage directly. So your notional profit is 3,02,000 into 2 divided by 3 into the percentage of cash received, which is there in your question. So how much is the percentage of cash received? What is cash received is in your question is 80% of this is received accordingly. So cash ratio is 80%. So 3,02,000 into 2 by 3 into 80% will give you 1,61,067 rupees. So now the remaining will be transferred to your reserves. So 3,02,000 minus 1,61,067 will give you the difference of 1,40,933. So which will be transferred to your reserves account. So now we will prepare the next year's contract account. So the the work in progress of 2015 will be brought down to 2016 work in progress. So two work in progress, certified and uncertified, of 2015, 11,25,000 and 20,000 will be brought down for 2016. So the total will give you 11,45,000. So with this we will minus the reserves which has been transferred for that year. So for 2015 the amount which is transferred to the reserve is 1,40,933. So we will minus less reserves 1,40,933 will give you 10,04,067. So now with this we will add on all our expenses. So what are your expenses for 2016 is the amount expended were materials 1,26,000, wages 1,70,000 and cartage 6,000, sundry expenses 3,000. So materials 1,26,000, wages 1,70,000, cartage 6,000, sundry expenses 3,000. So now the in the credit items, as you have stated in the question clearly, we need to assume ourselves that the balance due to him was received on the completion of the contract. So in the year 2016 the contract has been completed. So when the contract, all the expenses are met, and on the completion of the contract, it is stated that on 30th June the old contract was completed. That is in the year 2016 the contract was completed. At the end of the contract we have stated all the amount was received on the completion of contract. So the full contract amount would be received. So we will be writing, there will be no work in progress. We will be directly writing by contractee's account. So how much is the contract amount? 15 lakh. So by contractee, as a contractee is paying us, by contractee 15 lakh. So now our credit items are more by 15 lakh. So we 15 lakh minus all your expenses, that is 10 lakh 4,067 minus 1 lakh 26,000, 1 lakh 70,000 minus 6,000 minus 3,000 will give you a difference of 1 lakh 90,000 933. So this is the notion, this is the profit and loss account. So when the contract is completed, the amount, the balancing figure what you get will be transferred fully to profit and loss account. It will not be called as notional profit, because notional profit is the profit which is temporary, out of which certain profit will be the transferred to profit and loss account, and the remaining will be transferred to reserve. So it is not the full profit which is enjoyed in the contract. But when the contract is completed at the end of the year, that will be indicated as profit and loss account, because from this part there will be nothing transferable to reserve. So it is called as to profit and loss account 1,90,933. So next we will prepare our contractees account. Under contractees account for the year 2014, we are receiving cash of rupees we are receiving cash of rupees 3 lakh. We are receiving cash of 3 lakh. So how did we get this 3 lakh? Is in the question it is stated clearly that for the year 2014 the work certified is 3,75,000 and 80% of this was paid, that is was paid by the contractee, and we have received it. So 3,75,000 into 80% will give you 3,75,000 into 80% will give you 3,75,000 into 80%, that is 80 divided by 100 will give you 3 lakhs rupees. So 3 lakh is the cash received. So 80% of 3,75,000 is 3,75,000 is 3 lakh rupees. So cash is received 3 lakh, and this balance will be carried down 3 lakh. So this 3 lakh will be brought down for the next year 2015. So by balance brought down 3 lakh rupees. So in this year, if you look into the question, in 2015 work certified, 3/4 of the work certified, and on 31st December 2015 80% of this was received. So in 2015 what is the amount of work certified is? In 2015 the amount of work certified is 11,25,000. So 11,25,000, 80% of it is 11,25,000 into 80% of this will give us 9 lakh rupees. So 9 lakh rupees is the cash which we have I'm sorry So in the year 2015, we are supposed to receive 9 lakh. In this 9 lakh, we have already received 3 lakh for the year 2015. So the balance what we are supposed to receive is 6 lakh rupees. So 9 lakh minus 3 lakh will give you 6 lakh. So by cash, what you have received for this year is 6 lakh rupees. So the total will be 3 lakh for the previous year. Current year overall together you are supposed to receive 9 lakh. So as you have received in the previous year 3 lakh rupees, only 6 lakh you will be receiving for this year. So by cash, how much you are receiving? 6 lakh. So 6 lakh plus 3 lakh will give you 9, total of 9 lakh. So this 9 lakh is which is receivable by you for the year 2015. And for the year 2016, the contract is completed. So when the contract is completed, you are supposed to receive 15 lakh. By balance brought on from the previous year is 9 lakh. So out of 15 lakh, 9 lakh is already received. So the balancing figure is 6 lakh, which you will be receiving for the year 2016. So by cash 6 lakh rupees. So the total what you've got is 15 lakh. So as the contract is completed, to contract account 15 lakh. So this is how you're supposed to prepare your contractees account. So the next problem is problem 4.15. Light Limited was engaged on one contract during the year 2015. The contract price was rupees 2 lakh. The trial balance extracted for the books from the books on 31st December 2015 stood as follows: share capital for 40,000. Sundry creditors 4,000, building 17,000, cash at bank 7,500, contract account materials 37,500, plant 10,000, wages 52,500, cash received from contractee 80,000, expenses 2,500. So the total is 1,24,000 both the sides. Of the plants and materials charged to contract, plant costing rupees 1,500 and materials costing rupees 1,200 were destroyed by an accident. On 31st 12 2015, plant costing rupees 2,000 was returned to stores and materials at site was valued at rupees 1,500. Cost of uncertified work was rupees 1,000. Charge 10% depreciation on plant. So prepare contract account for the year 2015 and balance sheet as on 31st 12 2015. So here they have given the items which to be shown in the balance sheet as well and the contract expenses. So first let us prepare our contract account. Solution: contract account for the year ending 31st December 2015. Materials: in the question you have materials 37,500, plant 10,000, wages 52,500, which we will be taking here. Next we have expenses 2,500, that will also be classified here. Next we have of the plant and materials charged to the contract, plant costing rupees 1,500 and materials costing rupees 1,200 were destroyed by an accident. So these plants were destroyed by an accident, so it is no more into the contract, so it is outside the contract. So we have plant destroyed 1,500 and materials lost 1,200 will be accounted in the credit column. Next, contract account, cash received. Then later we have in the problem on 31st December 2015, plant costing rupees 2,000 were returned to stores and materials at site was valued at 1,500. So plant costing rupees 2,000 which was returned to stores. So from the site it's going out to the stores. So we'll be recording it in the credit side. Plant returned to stores. So return to stores which is uh, uh, which uh, which is 2,000, but they have given to charge depreciation on the contract on the on the plant. So on 31st December, plant costing 2,000 was returned to stores and materials at site was valued at 1,500. So cost of uncertified work was 1,000 and they have stated charge 10% depreciation on plant. So this is the opening value of the plant, and the plant which was returned to stores will have depreciation value to it. So we will charge the depreciation value to the plant, so to show the end value of the plant. So by plant returned to stores, so after using the plant of 10,000, the remaining is returned to stores. So on that we will show up our depreciation. So by plant returned to stores, 2,000 is the plant which is returned to stores less 10% depreciation, which will give you 1,500. Next we have next in the problem, on 31st 2,000 was returned to stores and material at site 1,500, which has been considered here materials 1,500. Next, we have cost of work uncertified 1,000 rupees. We need to check whether they have given us a cost of work certified. Here they have stated cash receipt from contractee, 80% of the work is certified. So this is the cash received amount 80,000. So we need to find out 80% of work certified, or how much is it. This cash what they have received is 80% of the work certified, which is 80,000. So what is the work certified? So 80,000 is the cash received amount. So we will do the calculation in the Excel sheet. So the cash received is 80,000. So 80,000 is the cash received. Work certified is which is cash received is 80,000, which is 80% of work certified. Next, 100% will be the work certified. So now we will cross multiply. So when cross multiply, when cash received is 80%, then work certified, if it is 100%, what is the value for it? So cross multiplication, 80,000 into 100 divided by 80, which will give you 1 lakh rupees. So your work certified will be 1 lakh rupees. So 80% of work certified is 80,000. So next, so your work certified is 1 lakh rupees. So by work in progress certified, as per the calculation we have got 1 lakh, and work uncertified as per the question which is given in the question here, which is given in the question, which is said that cost of uncertified work is 1,000 rupees. So we have taken work certified and uncertified. We have taken plant returned to stores and we have charged the depreciation on it. Then by plant destroyed we have taken, by materials lost we have taken. Now we need to take the adjustment value, that is plant that is which is stated here, of plant main materials charged to the contract. Plant costing 1,500 and materials costing 1,200 were destroyed by an accident is already accounted. On 31st December 2000 was returned to stores and materials site was valued at 1,500. So this 1,500 should also be taken. So materials at site 1,500, materials lost 1,200 is done. Then by plant destroyed 1,500 as per the adjustment is taken. Then plant return to stores is also taken and the percentage of depreciation is charged to it. So the item which we have not taken and which is not there in the problem is by plant at site 5,850. This is not there or represented in the question. So how did we get this calculation is, so by plant, initial value of the plant is 10,000. So in this 10,000, actual amount which is destroyed is, so 10,000, the plant which is destroyed is 1,500. So 10,000 minus 1,500 will give you 8,500. So out of this 8,500 we will charge the depreciation of 10%. So 8,500 into 10% will give you 850. So 8,500 minus 850 will give you 7,650. With this 7,650 we are transferring plant to stores. So when we transfer plant to stores of 2,000, from 7,000 from the 7,650 minus plant 2,000, we will get 5,000. We will be getting 5,850. From 7,650, if you minus 2,000 of plant which is returned to stores, we will be getting 5,650. So as we have charging depreciation on the items which is returned on the stores, we will not be minusing 2,000, we will be minusing 1,800. So from 7,650 minus 1,800, you will be getting 5,850. This is the exact value of the plant which is remaining at the end of the contract. So again I will show you these calculation in the Excel sheet. So 10,000 is the exact value of the asset in the initial period. In this 10,000 we will be minusing 1,500, which is the plant which has been destroyed. When we minus from 10,000 1,500, which will give you 8,500. From 8,500 we will be minusing 850. So 850 is nothing but the depreciation which is charged on 8,500. So 8,000, the plant which is destroyed will not have any value which is all gone. So we can't charge depreciation on the destroyed amount. So we will minus that 1,500 and we have got 8,500 on that 10% depreciation, which will give you 850. So 8500 minus 850 will give you 7650. So 7650 minus 2000, when you minus 2000 you will get 5650. But as this 2000 which is also which is returned to stores, but it is also an asset where depreciation has to be charged on it. So after depreciation, the value of the asset which is returned to stores is 1000. I'm sorry, after return to stores is 1800. So we will minus from 7650 minus 1800, which will give you 5850, which is the exact value of the assets at the end of the period. That is what has been taken in the calculation or in the contract account. So this is our contract account. Buy plant at site 5850. So all the items which was there in the adjustment we have taken. So when we total up, we find that the total in your credit side, which will give you 1,12,850, is more than compared to your debit items, all your expenses. So 1,12,850 minus 37,500 minus 52,500 minus 2,500 minus 10,000 will give you 10,350. So 10,350 is nothing but the notional profit which is carried down. So now this notional profit should be distributed to your profit and loss account and to reserves account. So we will bring down the notional profit. By notional profit brought down 5,250. So 5,250. So after we bring down the notional profit, we should calculate what is the percentage of work completed. To calculate the percentage of work completed, the formula is work certified divided by contract price. So your work certified is 1 lakh. 1 lakh divided by contract price, which should be in your question, which is 2 lakh. So your work certified is 1 lakh. 1 lakh divided by 2 lakh. So 1 lakh divided by 2 lakh. So the percentage of work completed is work certified divided by contract price. So now the work certified is 1 lakh rupees. So 1 lakh divided by contract price, which is 2 lakh, which will give you 0.5. So 0.5 into 100, which will give you percentage of that decimal. So into 100 will give you 50%. So 50% is the percentage of work completed. So now as a 50% of work completed, the percentage of work completed which lies between 50% to 90% will have the formula notional profit into 2/3 into cash received divided by contract price. So now by to profit and loss account, notional profit which has been brought down, which is 10,350. So 10,350 is the notional profit. So 10,350 is your notional profit. Out of that, 10,350 into 2 divided by 3 into cash ratio. Cash ratio is nothing but cash received divided by work certified. So cash received in your question is, which is given here, cash received is, you can take 80% directly, or as a cash received is given divided by work certified is also the same. So cash received divided by work certified, which is 80%, or or you can take directly the 80%. You will be getting the same calculation. You can either take 80% or you can use the formula cash received divided by work certified. You will get the same answer. So 10,350 into 2 by 3 into 8 lakh divided by 1 lakh, you will be getting a profit which is to be transferred to profit and losses 5,520. So 10,350 minus 5,520 will give you 4,830. So the balance is the balance which has been transferred to reserves is 4,850. So this notional profit will be tallied on both the sides, 10,350 and 10,350. So now next is they have asked us to prepare the balance sheet. So balance sheet will be prepared here. So balance sheet as on 31st December 2015. Share capital as per the question which is given 40,000. Sundry creditors 4,000, which will appear in your liability side. So share capital and sundry creditors will be accounted first. Share capital and sundry creditors. Next, your assets. Building 17,000 will be taken, and cash at bank 4,500 will be taken. Building 17,000, bank 4,500. Next, we will be taking work in progress items. So work in progress, your work certified in the question is 1 lakh and uncertified is 1,000. So work certified 1 lakh and 1,000. We will be getting 1 lakh 1,000. With this, we will minus our cash received. So the cash what we have received is 80% of the work certified, which is given in the question, which is 80,000. So we will minus 80,000. So we will be getting the balance 21,000. With this 21,000, we will minus the reserves which has been transferred, the profit which has been transferred to reserve. So minus reserve 4,830, which will give you the balance of 16,170. So we need to update other items as well here: plant and stores and plant at site and materials at site. So how much is the plant in stores? So the plant in stores which is there in the problem is which is given in the problem is so we have plant and stores. So plant and stores, as per our calculation, what we have got is 1,800. Plant which is returned to stores is 1,800. So plant and stores is 1,800. Next, plant at site. So plant at site, in the calculation what you have done is plant at site 5,850. So I hope you remember how did we get 5,850. So plant at site is 5,850. 5,850. Next, materials at site, which is there in the contract account. Materials at site 1,500. So materials at site 1,500. So now a balance sheet on your asset side is done. The calculation of the balance sheet on the asset sides are done. Next is we have share capital 40,000, sundry creditors 4,000, which we have recorded. Then we will be taking our profit and loss what we have got. Any loss we will minus. No profit and loss which we have got is our notional profit, that is 5,520 is our profit which we have transferred to our profit and loss account. 5,520 minus the destroyed, that is the things which are being damaged. It can be an asset, a fixed asset, or a current asset which has been damaged. So plant is being damaged, destroyed as per the question which is stated. So we will be minusing that from our profit and loss because we need to bear that loss. So plant costing 1,500 and materials costing 1,200 destroyed by an accident. So we will minus less plant destroyed 1,500, where we'll be getting 4,020, and we will minus materials which is lost as 1,200. So the difference what we get is 2,850. So now when we total up 40,000 plus 4,000 plus 2,850, we will get 46,850. And here when we total up 17,000, 4,500, 1,800, 5,850 plus 1,500 plus 16,170, we will get 46,820. So in this case, in this contract, as they have given us the liabilities item and assets item and we have classified accordingly, our balance sheet is matching. So the next problem what we are going to discuss is problem number 4.16. Following is the trial balance of construction company engaged on the execution of a contract number 303 for the year ended 31st December 2015. Contractee's account amount received is given, which is 3 lakh. Buildings, creditors, bank balance, capital account, materials, wages, expenses, plant. The work on contract number 303 was commenced on 1st January 2015. Materials costing 1,70,000 were sent to the site of the contract, but those 6,000 were destroyed in accident. Wages of rupees 1,80,000 were paid during the year. Plant costing 50,000 was used on the contract all through the year. Plant with the cost of rupees 2 lakh was used from 1st January to 30th September and was then returned to stores. Materials of the cost of rupees 4,000 were at site on 31st December 2005. The contract was for rupees 6 lakh and the contractee pays 75% of the work certified. Work certified was 80% of the total contract work at the end of 2005. Uncertified work was estimated at rupees 15,000 on 31st December 2015. Expenses are charged to the contract at 25% of wages. Plant is to be depreciated at 10% for the entire year. Prepare contract account 303 account for the year 2015 and make out the balance sheet as on 31st December 2015 in the books of construction company. So they've given us the trial balance of construction company, and they've asked us to prepare balance sheet as well as the contract account. So let us prepare a contract account. So now let us get into the solution. Contract number 303, account for the year ending 31st December 2015. So the items are materials. We will be taking the expenses first. Materials. In the contract account, in the information what is given, materials is 2 lakh, but the work on the contract number 303 was commenced on 1st January 2015. Material costing rupees 1,70,000 were sent to the site of the contract, but those of rupees 6,000 were destroyed in an accident. But actual materials which is sent to the site at the contract where the contract is actually taking place is 1,70,000. So we will be taking two materials 1,70,000. Then two wages in the problem, which is given 1,80,000 and is taken 1,80,000. Expenses 47,000, but they have stated here wages of rupees 1,80,000 were paid during the year. Plant costing 50,000 were used on the contract all through the year. Plant with a cost of rupees 2 lakh was used for 1st January to 30th September and was then returned to stores. Materials cost is given. Then they have clearly stated that expenses are charged to the contract at 25% of wages. So your expenses here is 47,000, but actually what they have charged is 25% of your wages. So wages is 1,80,000. 1,80,000 into 25% would be your expenses which you will be taking in your contract account. So now expenses is 45,000. So how did you get your 45,000 is 1,80,000 is the wages into 25% will give you 45,000. So actual expenses is 47, and the percentage which is taken in the contract is 45. So there is 2,000 rupees difference. 47,000 minus 45,000. So that 2,000 is unabsorbed expenses. So that you will be deducting it from your profit and loss in your balance sheet when you will be showing your balance sheet. Next, after that we will be taking wages expenses over plant, which they have stated 2,50,000, but we will check in the adjustment what is the actual plant which they have introduced into the contract. So plant costing rupees 50,000 was used on the contract all through the year. So we can take 50,000. Plant with a cost of rupees 2 lakh was issued from 1st January to 30th September and was then returned to stores. So plant, there are 50,000 was fully used for the year and 2 lakh was used only from Jan to September. That is only for 9 months, and the remaining were and then those plants were sent to return to stores. So then they have stated that plant is to be depreciated at 10%. As I've told, you can show the opening value and closing value at the debit side, opening value and closing value at the credit side, or you can show the depreciation directly. We will show the depreciation directly here. So to depreciation on plant, we have got 5,000 plus 15,000. Depreciation percentage as per the question what they have told is 10% to be taken for the entire year. So first value of the asset is plant costing 50,000 was used for the contract for the entire year is stated. So 50,000 into 10% will give you 5,000. Then you have 2 lakh was used from 1st January to 30th September. So only for 9 months it was used. So what we will do is 2 lakh into 5% into 10 divided into 10% into 9 divided by 12 will give you 15,000. So 15,000, how did you get this? 2 lakh value of the asset which is used from Jan to September, which is only 9 months. So you will be calculating depreciation only for 9 months. So 12 lakh into 10% into 9 divided by 12 will give you 15,000. So the total depreciation for the plant is 15,000 plus 5,000, which is 20,000. Next, we will go to our credit side. To look into your credit side, your work certified, work not certified, that is your work in progress should be there. So have they given in the problem work certified and work uncertified? The contract was for rupees 6 lakh and the contractee pays 75% of the work certified. Work certified was 80% of the total contract work at the end of 2005. And uncertified was estimated at 15,000. So work certified, what they have told, 80% of the total contract. So what is your contract price? Your contract price here is stated as, So your contract price is 6 lakh. 6 lakh into 80%. Why is it 80%? Is work certified was 80% of total contract. So 6 lakh into 80% will give you work certified, which was work certified 6 lakh into 80%. If you calculate, you will be getting 4 lakh 80,000. Then work uncertified, which is there in the question, which is stated work uncertified is 15,000 on 31st December 2015. So work uncertified is 15,000. Next, any other items which we have left over, just check in the problem. You have taken wages, plans are being calculated. Then materials of cost of 4,000 were at site. So this is the closing value of the material. So we will be showing it here. Materials at site 4,000. Then just read the question once to find out any missing items are being which are not being recorded. Then if you come across here, the work on the contract number 303 was commenced. Materials costing rupees 1,70,000 were sent to the site of the contract, but those of rupees 6,000 were destroyed in an accident. So there were materials of rupees 6,000 which were destroyed in an accident. So materials destroyed 6,000 should also be recorded. So by materials destroyed or lost by accident 6 lakh. So this would be minus from the profit and loss in the balance sheet. So now if you calculate the total what we are getting in your debit and credit as the highest total, which gives you 5 lakh 5,000. So minus 5 lakh 5,000 with 1 lakh 70,000, 1 lakh 80,000, 45,000, 20,000, you will be getting notional profit of 90,000. This notional profit would be brought down to be divided to be transferred to profit and loss as well as reserve account by notional profit 90,000. So 90,000 into this notional profit to be transferred to profit and loss, you need to know what is the percentage of work completed. To calculate the percentage of work completed, the formula is work certified divided by contract price. Your work certified is 4,80,000. So 4,80,000 divided by your contract price is 6 lakh. So we will calculate 4,80,000 is the work certified and contract price is 6 lakh. So formula is work certified divided by contract price. So how much is your work certified, which is 4,80,000 divided by your contract price is 6 lakh. So you will get 0.8, which is nothing but 100%, which will give 100%. So multiply by 100, you will get 80%. So 80% in the sense the formula will be notional profit into 2 divided by 3 into cash ratio. Cash ratio or cash ratio formula is nothing but cash received divided by work cash received divided by work certified. So this will be the formula. So now when we use this into the formula, your notional profit what you have got in the problem is 90,000. So 90,000 is equal to 90,000 into 2 divided by 3 will give you 60,000. So 60,000 into cash ratio. So just check in the question if they have given cash ratio in the question. What they have stated is the contract was for rupees 6 lakh and the contractee pays 75% of the work certified. That means the cash ratio is 75% of the work certified is received. If you can take directly 75%, or what you can do is you can find out the cash received amount. So let us find out the cash received amount. So now work certified is how much here? Work certified is work certified which is given in the problem is 4,80,000. So 75% is your cash received. So cash received is 75,000. So into 75%, which will give you 3,60,000. So 3,60,000 is your cash received. So cash received divided by work certified will be your cash ratio formula. So your cash ratio formula is cash received divided by work certified. So your cash ratio formula is cash received divided by work certified. Your cash received in the problem is 3,60,000. So how did you get your 3,60,000? It is Your 3,60,000 is nothing. 4,80,000 into 75% of your work certified. As per the question, cash received is 75% of work certified. So when we take 75% of the work certified, you will get 3,60,000. This is the formula. When you use the formula of cash ratio divided by work certified. So your cash ratio is 3 lakhs cash received divided by work certified. So cash received is how much? 3,60,000 divided by work certified is how much? 4,80,000. You will be getting 75 percentage. So now when you can take the percentage which is there in the question as 75 percentage, or you can use this cash ratio formula which gives you similar answer. So now notional profit into 2 by 3 into cash ratio is 75%, or you can use the cash ratio formula which is cash received divided by work certified, which will give you the same 75 percentage. So now that notional profit, 90,000 is your notional profit into 2/3, because the work certified is more than percentage of work completed is 80%. So as the percentage of work completed is 80%, 2 by 3 will be considered. So notional profit into 2 by 3 into 5 divided by 8 into 5 divided by 8 is given here. Here it is 5 by 8, because in the question it is stated that cash received or the contractee's account is 3 lakh rupees. So the amount received from the contractee's account is 3 lakh rupees. Even though the percentage states 75%, but in the problem the contractee actually received 3 lakh rupees. So we will be taking 3 lakh as cash received. And if you take 75%, then the profit which is to be transferred will be 45,000. When 45,000 is being taken, then there will be slight changes in the balance sheet, which can be adjusted in the adjusted in the balance sheet, or the balance sheet of the contract account will not match if we are taking 75%. So as per the question, what is the actual amount received should be taken. So the actual cash received what is given in the problem is 3 lakh, and divided by contract work certified, which will give you cash ratio. So 3 lakh, so when you simplify that, you will be getting 5 by 8, that is 6 5s are 30, 6 8s are 48. So simply simplified form in fractions, which you will be getting 5 by 8. So that is what is being taken here. So 90,000 into 2 by 3 into 5 by 8 will give you 37,500. So the balance 90,000 minus 37,500. So the balancing would be transferred to reserves account as 52,500. So now we will prepare the balance sheet as on 31st December 2015. So as per the question, buildings will be taken 1,60,000 and bank balance 35,000. Then buildings 1,60,000 and bank balance 35,000 will be taken. Buildings 1,60,000 and bank 35,000. So the others will be taken as next is plant in stores. So the actual worth of the plant which is returned to stores is 2 lakh. So 2 lakh was used from 1st January to 30th December and then was returned to stores. So 2 lakh. So 2 lakh 2 lakh into 10% depreciation, if you calculate, you will be getting 1,80,000. So the plant which is returned to stores, the worth is 2 lakh. 2 lakh into 10% depreciation, which will give you 20,000. So 2 lakh minus 20,000 will give you 1,80,000 as the plant in stores. Next you have plant at site. Plant at site is 50,000. In the question, if you read, plant costing 50,000 were used on the contract. So when it is used in the contract, it is nothing plant at site. So 50,000 into 10% will give you 5,000. So 50,000 minus 5,000 will give you 45,000. Next is materials in stores. In the question, you have materials costing 1,70,000 were sent to site by the contract, but those of 6,000 were destroyed. So this will be minus from the profit and loss. Apart from that, you have materials of cost of rupees 4,000 were at site. So we will be considering materials at site rupees 4,000. Next, you need to check whether any information about materials is given here. You have materials of rupees 2 lakh here in the question. So materials costing rupees 1,70,000. So materials in stores is 30,000. So how did we get materials in stores is 30,000 is in the question we have materials which is mentioned as 1,80,000 which is mentioned as 2 lakh when it is 2 lakh, but in the contract how much they have used is 1,70,000. So materials costing rupees 1,70,000 were sent to the site of the contract, but then you have other damages which has been occurred, but worth of 2 lakh materials only 1,70,000 was sent. So the remaining 30,000, where was it? It was in the it was in the warehouse and it was in the store. So material in store is 2 lakh minus 1,70,000, which is 30,000. So now everything is covered up in your asset side. So now we'll go to your liabilities side. In your liabilities, in the question they have given capital. So capital is nothing but 5 lakh. So 5 lakh will be taken here. Next, your profit and loss. So we have transferred to our profit and loss 37,500. In this 37,500, materials which were destroyed should be minus. That is a loss. 6,000 will be minus. So you will get 31,500. Next, unabsorbed expenses. So your unabsorbed expenses, where expenses are being actual expenses is more than the expenses which has been recorded, so it is again a loss to the firm. So we will minus that also in your profit and loss account. So that is 2,000. Unabsorbed expenses in the sense which is not recorded or which has been missed while recording, so that is also a loss which has been incurred. So we will minus 2,000. So when minus 2,000, the balance is 29,500. Now less depreciation on plant 5,000. So from where did you get this 5,000 is the value of the plant which is unused, that is it is used, the 2 lakh worth of plant is used from January to September only for 9 months. So the depreciation which is charged here on the full of the asset, that is from on 2 lakh fully, which gives you 20,000, and you have minus from 2 lakh 20,000, which gives you 1 lakh 80,000. That depreciation which has been over absorbed is also minus here depreciation on plant. So which gives an adjustment. Depreciation on plant of rupees 2 lakh has been charged to a contract only for 9 months. For remaining 3 months it has been charged to profit in the balance sheet. So we have deducted it from the balance sheet, from the profit and loss account. So less depreciation of the plant for the for the depreciation of the asset which has not been used after that period. So 5,000. So your total balance you'll be getting 24,500. Next you have creditors in the question. Creditors are 72,000, which you will be recording 72,000. So your total is 5,96,500 and your assets total is also 5,96,500.